What is cryptocurrency? Cryptocurrency was invented in 2008 by a mystery person or people using the name Satoshi Nakamoto to publish any content relating to the newly launched venture. Satoshi launched Bitcoin officially in 2009 as a digital reward for mining of blockchain nodes. These coins could be used to trade for goods or services autonomously across the web via a decentralized chain of custody. In 2011, Bitcoin was valued at 30 cents, and by the end of the year it had reached $5.37. Due to its discrete way of moving value through a chain via the web, it only took until June 2012 to reach $31.50 and started drawing attention from a wider audience of authorities as well as investors eager not to miss the next dot-com revolution. As fear and greed played out over the next decade, volatility became synonymous with Bitcoin, along with taxation and legislations. In December 2017, Bitcoin reached a parabolic high of $20,000 before dropping back off in the new year of 2018 and didn't reach the highs of Christmas 2017 until the Christmas of 2020, a full 3 years before the coin could challenge its previous high point through a period that saw countries such as China ban cryptocurrency, while others sought to create a national currency-type coin of its own. 2021 saw Bitcoin break the $60,000 mark, missing $70,000 by a small merging, showing that the old grandpa of cryptocurrency is still the leader in the commercial space. How are Bitcoins made? Bitcoin mining? A miner is a person or enterprise that utilize a computer's processing power to create new unique blocks within the blockchain. A miner who uncovers a new block is rewarded with a Bitcoin which is equal to the value of the current market price. There is also the added transaction fees that they associate to their block each time it is used. In terms of a comparative, in May 2020 the reward for mining a Bitcoin was 6.25 Bitcoin per block produced. At the same time, there was a sentiment in the market that stimulated the price up to $10,000 per Bitcoin. The rewards, however, are designed to reduce over time, reducing by half its value every time 210,000 blocks have been mined. This means Bitcoin in its current form is maxed to 21 million supply. There are several high-profile known cases of lost passwords or hard drives containing the network key for the block containing large sums of Bitcoin. Meaning a substantial amount is essentially trapped, which is another point that the halving event cyclically tries to account for. Shall I mine or buy Bitcoin? That would depend on your resources and current position. You can buy Bitcoin from many platforms now, in various forms that allow you to own or CFD the coin. Each has its own merits and associated fees and charges. However, after signing up to the platform and making a deposit, you can basically begin trading. That said, I would do some research before putting money into any asset class. In terms of mining, this requires a lot of hardware investment, along with the knowledge of how to navigate the mining space to achieve a reward. It also takes electricity to power a processor or multiple processors that will consume a high amount of money and services costs. In summary, Bitcoin, although being quite young in the investment space, has grown exponentially in the last 14 years, with no signs yet of slowing down, whilst attracting both retail, commercial and institutional attention worldwide during its rise. Who knows what the future holds, but with the continued additions of new projects and coins, the cryptocurrency space, supported by a plethora of funding streams, the future of Bitcoin currently looks quite bright.